Okay, let's jump right into it. So, end of the week, Friday, 21st of June. A little bit earlier today. What are we at? 9:46. So, still a little bit of time before we get much volume in and that, but that's good. It gives us a chance to have a little bit of a look over the charts and that. This will be last daily take for a little while, I think. I'm actually off to Europe on Monday, well, technically Tuesday morning, but Monday night kind of thing. So we'll do a couple of sort of updates on the road, but I think this will be the sort of last sort of daily take for a little while, just to sort of get things settled. But you know what, we could be sort of going off with a bang. So we'll have to see how things play out. Anyway, whatever. Here we go. So DXY. Yesterday we were coming down and we had this little sort of congestion area in that, and this is what I was saying. You had the little triangle. Typically, these things, as I said, you look at the direction they've come in, stalled, and then it looks for a continuation. Obviously, bang, we got a reversal, came back up to the other side. Interesting thing about this, though, I'll get to sort of metals and that in a moment because obviously, metals pumped overnight. But we could see sort of these levels here. So yesterday we were saying, look, you got the triangle. As you can see, it's coming down to the point. This is your first indicator that it might be moving back up. Well, the actual first indicator was this first sort of higher low, which put into this area, which, this green area, we've marked it out. We know it's an area that's important. It's typically more on the higher time frame. So again, higher time frames, it's going to be a little bit harder for things to go through straight away. But so higher low into this support area, a little bit of a gap down in that in the morning. But as it came through this triangle and then outside this congestion box. So these highs here at the top of this sort of little sort of consolidation breakout box, these are your swing high sort of points. So first indicator, well, technically first indicator this one here, but if you wanted to go, it was still inside this sort of triangle structure at this stage. Breaks out, back test, higher high, that's your first indicator. Above the swing highs, that's confirmation. And then I only chucked this line in afterwards. I'm not a big fan of this one because we only had two touches and it didn't even really seem to respect it a great deal through there. So I'm going to actually delete that one. That was more just a thought with this one. But yeah, so definitely came back up here. And this is what I was saying yesterday, actually. So I was saying that, look, these areas here, you can see how many times market tried to hold it and then market rejected it. And this was what I was saying. This is where we're going to come up to. Not necessarily where we're going to stop, but this is where we're going to come up to. And, for a brief moment there, you could see, bang, sold back down. Came back up again, sold back down again, came back up again, and at the third push, it actually went through. So then you sort of think, okay, so where have the sellers been after that? Well, you look left. So you got these bits over here, and then these bits over here. And then you sort of carry them across. Where have they come to? Bang, this level over here. Well, technically, probably, I guess you'd say that matches up with that, but, we're talking a pip or two here. And then, if we take out these highs, we move up to look for these highs. So that's all it is each time in that. And this is a good indication of this level here, whereas we can see it was sort of resistance again, and then once it finally broke through, came back, retested, tested for support. Like, that's the thing. It's sort of like, you don't need to reinvent the wheel with these things. You just need to sort of be able to sort of know how the structure plays out and how the structure works. And then you can sort of pick a pretty good idea as to sort of where you think the market's going to react from. It doesn't mean it's going to turn around. It doesn't mean it's going to stop. But it means that you've got a good chance that if it is going to sort of turn around or stop, or if it's going to sort of see a little bit of profit taking, these are the levels. So you can sort of then trade accordingly. You can sort of, take some risk off the table, close some positions, add to positions, depending on whatever you're trading or however you're trading with it all. But yeah, that was an interesting sort of little breakthrough with DXY there. So anyway, get these out of the way just for now. What we're sort of seeing here, clear this up, try and keep the charts a little bit cleaner for the time being. I'm looking at this last little push here. Now, typically, I've fallen into the trap of doing this on lower time frames, and it's all like anything, it's all relative. So lower time frames, you can still see the same structures, but you got to understand that the reaction is going to be kind of equivalent to what that time frame is. So what I mean by that is if you're looking on a, say, 15-minute time frame and you're looking for a negative divergence is what I'm talking about here, negative divergence on a 15-minute time frame, you can't really expect that to sort of then see a big major shift on a daily time frame or a sort of like a 4 hour time frame. It just they don't really correlate so directly in that. So same sort of thing. If you see a sort of like a negative divergence on a daily, generally that's going to last a little while, and it's not going to be like a half an hour or an hour kind of setup with it all. So it's all relative to the time frame you're looking at. So I try not to look at anything under an hour in terms of the negative divergence now, because it's an easy trap to fall into. You get sort of sucked into these positions. It works for a few minutes, half an hour, or whatever, and then bang, whips you out. So what I'm looking at here are these highs through here. So if we make this one a little negative divergence that we like, so we're seeing the price, obviously, it's pushed through and come up to the top side over here. We've got highs, we got highs, we got higher highs, and then we have a look at the sort of the sells, or sorry, the sells, the Stoch, the RSI, and we pick out these highs. These highs line up with these highs here, and then we pick it up, and we can see that as price pushed up to the top side here, we didn't see the relative strength sort of coming up and matching it as well. And in fact, this is another sort of thing I saw the other day where they were saying that sort of like if you see the second push and this second push is underneath 80, then that could be a higher thing. So I'm not confirming that. I'll come back to this one about this sort of this move under 80. You know what I'll do? I'll put a little note on it. Remember to come back. Review. Beautiful. Oh. A little bit smaller. Let's do this one out. This bit here. And then put these just on current interval so I don't sort of get a mix and match when I look on my 4 hours or something. So yes, so as I said, we're coming up into a higher time frame resistance area. We've got a negative divergence on the 1 hour, and we're seeing a little bit of a gap down just at the open here. Now, as I said, you go through different patches there. There was a period there where DXY would sort of gap down or gap up, and that would be pretty much lead indicator of the direction for that session. We're seeing a bit of an inverse thing at the moment. So this is what we've got to sort of see if we can sort of pencil out, is that still going to be happening, or are they going to sort of flip it out? So we look at a couple of other periods. So we got a little gap down just here, gap down, jammed straight up to the top side, gap down, right up to the top side. See if we can see any other sort of little gaps that we've got around here. This was a gap, this is an open, yep. So gap up and continued up. Came back and closed the gaps. And the other gaps are quite small, so we gapped up, gapped up. So looking at the most recent kind of ones, we see gap down, moves up, gap down, moves up. This is gap down. Doesn't mean it's going to move up. I mean, as I said, we've got the negative divergence and we're coming into a resistance area. It's just something to sort of, just keep in the back of the mind and that, because at the moment we're seeing metals push up very strongly. We're seeing DXY push up very strongly. One of them most likely is going to have to give. Like, you're not going to see them both sorry, just making sure they're still recording. One of these is going to give. Gold and DXY can run in sync, but typically it's for a very small amount of time. And then, as I said, one of them will give way. So we had a little bit of data out overnight. So this is, again, a little bit more of a sort of deeper dive into this sort of stuff. But if I flick onto yesterday's data here, where are we at? So overnight, you can see a swag of USD data came out. Unemployment claims ticked up. That's bearish for the dollar. Building permits moved down. They were expected to move up. That's bearish for the dollar. Manufacturing index, big miss to the downside. That's bearish for the dollar. Account credit and housing starts. Account credit, I'm not 100% sure on, but it does look like it's come in negative, below expectations there as well. And housing starts, self-explanatory there, and that's obviously all these things. They're expecting a continuation. All these sort of predictions or expectations have been a push to the top side or a positive. And not only did they not reach the targets that they picked out, it's actually come in negative in the other direction. So, I mean, given that kind of data and that new release to the market, it's not in line and conducive for dollar strength. So that with the technical setup makes me kind of feel that you know what, the dollar may be due for a little bit of a pullback here, and maybe this was a little bit of a squeeze. Because we do have a couple of other factors involved with it all. One being the yuan, which I'll get to in a little bit. They sort of let that go and punched through to a a monthly couple of month high on that. That's going to sort of feed into a little bit of US dollar buying. We had Swiss bank cut their rates unexpectedly. Well, there was talk of it. There's a couple of guys that I watched in that, and they were saying, "Oh, look, there's a high chance that they do an unexpected cut, even though the market expectations were technically what they priced in didn't have the cut." So you've got the Swiss unexpectedly cutting. You've got Bank of England. They held rates overnight, which was market expectation. And you've got China also held rates, and we've got the yuan that's pushed up there. So all those kind of things add into sort of this dollar buying strength. But if you look at it as an actual currency itself and what they're doing, they're coming in. What was holding the US dollar up was strong economic data, because the stronger the economic data, it means that the Fed aren't in a position where they're like, oh, we got to help the economy along, and they help the economy along by cutting rates. Cutting rates, well, the prices, the value of the currency goes down. That's just how it works. And if you look at the 10-year yields for the US, it's been lagging. Even though US dollar's been pushing up, the yields haven't been reflecting that. So it feels like there's a couple of other forces at play here. So we'll have to sort of see how we go through here. I mean, there's a couple of areas of support for the downside here. Again, just look at this zone where we've sort of seen price react. Bang, bang, bang. It's not going to go through straight away if it does come down to the downside here. Top side, we've got a pretty good little target up in this area over here. You break above 105.85, well, okay, you got to reevaluate what's going on. But as I said, fundamentally, sort of with the data that was sort of holding the US dollar up, that's coming in not only below expectations, but actually in the other direction, which is, as I said, more in the camp of cuts sooner rather than later. And then you've got the technicals. And this is just on the 1 hour, as I said, so it's not necessarily a big sort of turnaround move, but it is something to sort of keep in mind. So have a look at what it looks like. I mean, look at this rip. Yeah. This, as I said, these kind of moves like this, where it's just all this could just go out the top there. Of course, anything's possible. But where we get to, it might have actually got the body fill. Is this the body fill through here? So that's the body, boom. It's always a good target. Don't worry about the wick so much. Go for the body fill. And as you can see, clipped it and then sort of came back down here a little bit as well. But look, this is on the 4 hour. It certainly did rip up to the top side here. Coming in a little bit overboard, but it's not too extreme. I mean, it hasn't sort of flattened out and it's not rolling over quite yet. But again, these kind of moves that are all just straight up one direction like this are a little bit squeezy, in my opinion. You want to see if sort of, I mean, look at these sort of moves here. How fast up, stuffed around at the top, fast down, fast up. Choppy, choppy, choppy. That's generally how sort of things will move up if they're going to maintain and grind, because you're getting new people jumping on board at each level, and that's sort of creating new bases all the way along. Here, we don't have so much of that. So again, I'm reluctant to believe that this is going to go through the top, given sort of all the factors that I've kind of just mentioned. All right, let's flip across gold. Ripping back, and what a trade this was yesterday. Like if you've been watching what I do and that, you know that I've been harping on about gold down at these levels for a whole bunch of time and that, and it has been an absolute, actually even sort of all through this area here, has been an absolute heartbreak. It is really, really sort of done. And excuse me, if you watch what I do, it's what I've said. I've said this chart at the moment is very ugly, and I do believe that it's by design. The whole market was looking for 2,500. You know, going up here, smash down. Came up here, smash down. I was feeling it, and I trade a lot. Like, you know what I mean? I've traded for a while, and I'm even sort of, oh my God, blah, 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 blah. But eventually, you know, I came to the conclusion that this trade here was overcrowded because everybody that was looking for 2,500 has been wiped out. Unless you're sort of really sort of staunch and you're holding $150 swings through it all, which, you know, of course, there's going to be someone to do everything. But that's a pretty sort of tough position to be in. So the majority of the market is wiped out looking for 2,500. And then you flick on, I mean, you have a look around and everybody's like, oh, you know, when's it going to happen? It's not if, it's a matter of when, and all this kind of sort of, you know, just cliche kind of garbage crap. And it becomes too crowded. All of a sudden, everybody that was looking for 25's wiped out. They're thinking, oh my God, no, it's going to come down. Everybody's looking down. So what does it do? It rips up to the top side. And this is why we've got this path coming up here. And this is what I've been saying through this area here. And it's been a hard break and it's been tough. I mean, I closed a few of my last positions yesterday. I had my sort of best one that I had was from 23.11. So just down at this bottom point here and just closed that at around mid 50s or something, I think it was yesterday. But, you know, we're seeing this price action exactly as we kind of said. So it was going to break out of this area. We're going to see a pushback. And look, you know what? It got within technically of where this is, you know, $2 or $3 or something of this little sort of price target part here. And then what did it do? It pulled down. What did it do next? Pushed up to the next price target. Took it out. It's pushed, well, it hasn't actually pushed back down like this. It's just charging on through. So yeah, we're seeing gold and silver both sort of perform quite well at the moment, and this is what I mean. You know, gold and DXY can run in unison, um, but not predominantly, not for the majority of the time. The majority of the time, they'll revert back to their inverse relationship, and this is why I say gold can be risk fluid because it can run with risk on and it can run with risk off. So we look at now, and one of the big sort of takeaways with gold at the moment is this big falling resistance down through here. We've gone through. We've gone through this little area, which we could see was, you know, this was a resistance here, resistance here, support here, tried to be resistance, and it's pushing through. It's not guaranteed. This could still, as I said, roll down and bang, do this kind of thing, stuff around. 11 o'clock, that's the metal buying, selling hour. That's where we see the volume in Asia, 11 o'clock. So yesterday they ripped it. You know what I mean? And this is what I think. I put the call out, put the message out, sort of said, look, you know what, we've always seen it like this. Are we seeing a flip of this? Well, always seen it like this. For the last month, we've always seen it like this. Are we going to see a flip of this? And that's the thing. And this is a perfect example that, you know, they'll do it. 11 o'clock, bang, sell it down. 11 o'clock, bang, sell it down. Do it for a month straight. And then the time that sort of everyone's like, this is an easy trade, they sell it down at 11 o'clock. Well, what do? They jam it up the other side. So take out the wicks from yesterday. Above 66, and we're moving on. And so above that, where are we looking? We're looking mid 70s and then major breakout at 80. You get above 80, we're going back up to test 24.10. You know what I mean? They're pretty clear cut. And look at how quickly, this is what I was saying a moment ago, how quickly it moved through this area. Like, yeah, it did its back test, but once it did move, moved very quickly through here. Same when it was coming down. I got wiped on this bit here because I was trying to sort of fade this move and it just kept going and going and going and going. Horrible move. But this is what we could potentially expect to see if we get a close up. It probably doesn't even need to break past 87. I've been saying 80 the whole time. 87 is the high there. So yeah, if we get a close 4 hour or better above sort of in the 80s, I think that's going to be a good chance for us to sort of be starting to talk about the 24.10s. We never got the back test. of this area here. So this is going to be quite a tough one to crack, this level up here. But you know, we're in the path at the moment. I mean, we were at the same time here as well before they came out with that sort of China stopped buying headline or whatever. Perfectly strange the timing, you know, 4 hours before the NFP, but whatever. That's the game. So yeah, look, at the moment we want to see continuation by way of taking out that wick and keep driving up the top here. There's a lot of people that are short through these areas. So you got to think sort of like, you know, they're going to be like, this is mad choppy through here. But, you know, anybody that's sort of caught this short here or anybody that's been trying to fade this trade as it moves back up here, they're going to be sort of putting their stops up around this area over here. They're going to be saying, look, you know what, as long as it doesn't put in a new high, I'll be okay. I'm willing to wear a little bit of the drawdown to sort of get that big move because a lot of people still think that it's going to break down. And look, it still could. As I said, DXY, it's pushing up. So, you know, one of them's got to give. It could be gold. It could be the metals. We'll have to sort of wait and see. But the thing is, for now, you know, we are seeing it catch a little bit of a bid. We put it on a daily. How's it look? Daily is looking like it's really wanting to sort of move a little bit higher here. And this is another sort of thing through here. We're seeing lowers, and as I said, this has just been rolling back up the top over here. So you take out that wick, I think, yeah, we've got sort of 75 and 87 to be the areas to look for. And then if we sort of go up above that, we could be seeing, yeah, as I said, a push back up to 2400 at least above these levels. So where are we at? 61. So, you know, it's $39 push. As I've always sort of said, you know, Asia generally about $5 unless they decide to run it. If they decide to run it, we've seen some of the biggest moves in gold in Asia session, typically around the open. Yeah, a little bit of stuffing around and then it runs 50 or 60 or $70. So, you know, these things can happen. I'm not saying this is going to happen necessarily today, but it's something to keep in mind, particularly for the people that are short and trying to fade these things. We're through that falling resistance now. If you're a bear, you would have wanted to hold this point right here, but they didn't. So we'll have to wait and see how we go with it all. But yeah, certainly it's looking like it wants to have this third thrust. And this is what I've said as well. Typically with these things, you got 1, 2, 3, and that third will get you up to the top levels over here. So 25 back on the idea there. If, of course, we can get through all these levels here first. So there's a bit of work to be done there first. All right, across Aussie. Excuse me. Held up, all things considered, pretty well. As you saw, DXY has been sort of pushing to the top side. Aussie has just been absolutely garbagely slow. But as we saw a little bit of a break yesterday, we had this little consolidation, which this consolidation added, this is on a 1 hour chart here. This is like 36 hours or something, day and a half in a 15-point range. It looked like it was going a bunch of times, every time smack back down, smack back down, smack back down. And eventually, obviously, look, you can see it just gave up here. So when I was doing the video yesterday, I was saying, look, you know, you got to consider both sides of the coin. We had filled this wick over here. It seems to be a nice little area that it likes to sort of find some resistance. So let's just put this up. Boom. That's our little area here. I was saying downside, if it does break down, look, I don't think we were going to come all the way down here. I thought around the 50s. As you can see, it came down to 50, or what did it come down to actually? 47, 48. So it hit this little support area through here. So we know that there is some little buying support down through this area here. And if you look at sort of what I was saying about the silver chart the other day, you can see this can now be its range, and you can put a little break through the middle of this area here. So, whoop. Call that like kind of the middle of the range. So, get rid of that. Well, so what you want to kind of do is obviously spend more time in the top part of the range to signify more of a break to the top side, bottom side, well, break to the bottom side. It's pretty straightforward. So we can see it came up to 78% of this pullback here. And let's have a look at how it's going from this bottom here. So of this push here, look, we're still hanging right up in the top end. We're not even back to the 38% retracement of this little push up to the top side here. So look, I still think this has got potential, particularly since we saw how much DXY was ripping, and Aussie was just ignoring it. They didn't care that the rest of the market was trying to buy the US dollar. And this makes, again, you got to piece all these things together. And this is what makes me think that it's not necessarily, hey, crazy, let's all buy US dollars. It's just, let's buy US dollars against some other currencies that are a bit weaker. The yuan is weaker, and also the Swiss franc. Both of these things are contributing factors to the USD buying sort of power. But, obviously with the Aussie, it's given up 79, 40, 30 points from the highs. Not really much at all. So look, I'm still looking for major breakouts to the top side over here. If it does come down here, then look, again, you can look down. This 50% lines up pretty well with these highs over here. 61, we know that's always a pretty good sort of little pullback. This one did a 78%. So there's a couple of levels of support if it should decide to sort of break a little bit lower. Look, this is on the 1 hour. RSI looks like it might want to give it a bit of a go. 4 hour broke. It's got support. Take out last 4 hours wick high. And I think it's going to have another run towards the highs here. But I'll be watching DXY to see what they're going to do. I'll be watching the yuan to see what they're going to do with that as well, because they're the kind of factors that are going to obviously sort of give us a bit more of an insight as to the actual strength of this stuff. So we've seen equity markets come off a little bit from the highs. This weighs like equities. It's a bit of a sort of like an abusive relationship, I guess you could say, because when equities have been ripping to the highs, Aussie hasn't been sort of benefiting from it. But now that equities come off a little bit, it seems to be a factor that weighs into sort of why Aussie might not be pushing up as much. So you know what I mean. It's a bit one-sided with that kind of stuff, but oh well, it is what it is. For now, look, it looks like it's finding a little bit of support here. We can still break these things. You take out these lows down here. As I said, I think back around maybe the 20, so maybe a 30-point pullback to the downside here. I'll be having another look around this 66.21 level. But I still maintain dip buying for the moment. We are technically still in this range. I mean, you can see this has been going on since, well, really, start of May, so a month and a half or so, and we've just been in this little range through here. So there's a lot of liquidity sort of built up either side of these things. So once this breaks and holds, I think that's going to give us a bit of a direction moving forward. So the yuan weakening is something that's weighing on the Aussie though, for sure. Speaking of which, we'll flip across, have a look at the yuan. And this is what I was saying through here. So it has been on an absolute rip back up from these periods down here. And this is what I say, sort of like, it just sits in a range. Okay, yes, there's a shakeout bit here, but they let it go. And if we go back, looking at November last year, so these are yearly highs for the yuan. And we're coming up to the next level, which will be around 730 and a half. So that's an area that I'd be looking for an upside move with the yuan. I think there's sort of like the fact that they've let it go out of this little range. I don't think it's just going to plop out here and then sort of come back down over here. I did see as a report that sort of like, banks were sort of like stepping in and selling US dollars to sort of like, at least mitigate the speed in which it was sort of weakening. So you got to remember, this is US dollar strength. This is yuan weakening. So what they can do is then sort of flood the market a little bit with the US dollars, which will sort of slow the rate in which it'll actually go. So you're not going to say and shoot right up here because it is, for the most part, a pretty stable currency. Things do move, of course, but as you can see, it has sort of given way to this range over here, and this is what's sort of weighing on the Aussie a little bit. So I think we still have a little bit more upside here, potentially another. Excuse me. Not much, 142 pips or something here. So up until this 730 and a half, I would expect. As we can see, this is where the market tried to sell it down. Well, they did sell it down, I should say. Let's clear up a little bit of this. You can see the market sold it down here previously. They held it there previously, so this was a support area. This is our resistance area. So this is probably where I'd say they're taking it at the moment. So a little bit more upside there. Once that's done there, who knows? We'll have to reassess things as they sort of come out. Geez, that weekly open must be an old line. So yeah, yearly highs on the yuan at the moment, or USD yuan. All right, and finally with copper, because he's finally sparking back into it. This is what I was saying yesterday. We are breaking out of this little wedge end here, out of this falling resistance, and done a little back test and put in a higher high. So it's still got work to do. 46 and 47 are going to be the big levels that I'm looking for. 46 being here, 47 being to the top side over here. So back. And yeah, so we've sort of seen it sort of spring back into life a little bit through here. As I said, 46 and 47, they're the main levels you want to see it take out. I mean, we've got some littler sort of smaller kind of levels through here at 455. But that wick high there, where we saw this sort of push through, this is a news-driven thing, and then obviously bang, slammed it back down. Look, I hesitate to sort of say we've done it because I've been trading this. I sort of caught this move through here, got stopped out for a loss actually, which is quite annoying because I've timed this perfectly. Got in right here and it exploded up straight away. Got in again, added back in down here, caught this bit, didn't bank, came back down here, added more, came through here, had the news, came up here. I thought, bang, here we go, taking out the previous high, big sort of long candle, and then all the way back down here, stopped out for even. So back in, added a few more positions last night. So yeah, I got a decent size position now, which I'm happy to sort of sit on. I'm going to once again, as almost sounds like repeating myself here, put the stops to even, and just see if we can sort of catch this one and let it ride. As I said, look, if we're sort of going to see metals as a whole move, so you know, gold and copper don't necessarily move completely in sync. I mean, they're different metals, obviously, with different applications. But if we do see metals in general and commodities move, and we are about to sort of see gold rip to the top side, and we do see DXY sell off, copper will appreciate based off that. And that's what I'm willing to sort of give a shot and give up some more paper profits for a potential move back up towards, you know, these 48s to $5, those kind of levels here. So a lot of work to do. You know, I mean, we have seen it run. I mean, it did 30% all the way up through here. Doesn't mean it's necessarily going to run the same as this, but you know, we've come back here. We've hit the 50% retracement of that move. We're back in. We're ready to rock and roll. And yeah, if we can, as long as we can take out a couple of these levels, I think we'll feel a little bit sort of better than sort of how we have been previously. Look, I think underneath these wicks over here, this kind of level, let's put a little line here, this kind of zone here, underneath here, you know, I think sort of like we're going to have to sort of have a bit more of a discussion as to sort of whether this is just going to be doing this for, you know, a couple of months. Which, you know, if we look back again, look at how these things have played out in the past. Remember when it came through this area through here, this is the big sort of falling resistance, how absolutely mind-numbing it was trying to trade this area through here for anything with an actual hold position. I built a nice position right up around this level here just before we broke. I took out some profits over here. I got stopped out for half of it over here, and then I went to Japan. And of course, that was what ensued afterwards. So look, this thing can move. We just need the right conditions. We need a DXY sell-off. We need metals as a whole to be sort of punching along. If we get that, then there's no reason that we can't sort of really see these higher levels back up around, you know, up towards the sort of $5 area. All right, cool. That's pretty much it from me. Just a quick check of the news. PMI day today. So seeing sort of you know, a bit of Aussie data out before. This one was revised down. Aussie, again, it's not really doing too much at the moment. PMIs don't really affect Aussie a great deal, but obviously coming in a little bit weaker here than previously. No expectations here for some reasons. And then we can sort of look a rest of Asia session. We don't have anything. Retail sales for the pound. Look, that's expected to tick up there a little bit. Again, not massively impacting us. And then we've got the PMIs all through Europe. French PMI actually, for some, not for some reason, but you wouldn't expect it to be. Okay, that's the decision maker. Excuse me, but that is the one that moved last month that actually sort of got things sort of rocking along. And then later tonight, we got US PMIs as well, both of which expecting to tick down. Now, the last note I'll sort of leave with this is that remember, US dollar is really only staying buoyant based off the fact that it's got some sort of strong economic data on its home front. And then, of course, as I said, the other parts that I discussed, which is a weakening yuan and also the sell-off of the Swiss franc yesterday. So we'll have to sort of see how these things play out, but I imagine while the yuan keeps weakening, as I said, up until that price level that I mentioned, I think it's going to sort of put a little bit of a halt on Aussie. But in the meantime, we are seeing metals attempt to have a little bit of a continuation right here now. So that's where the eyes will be on coming through this session and the rest of the week. So I'll try and get a weekend wrap done before I head off, and then we'll be doing a couple of videos on the road as I'm going. But yes, we'll sort of see how we go with it all. All right, that's it from me.